Good morning. Today is September 7th and we are giving an update on AMC. And the reason that we're doing another video on AMC is because we did this very interesting data analysis late last week. We posted a video about it. You can find it on our YouTube channel. It's called the AMC Gamma Hedging Conspiracy. And in that data, we showed exactly how AMC tends to move. You should watch that video to get a better understanding of what it is we're talking about, but let's just give a quick overview. What we mentioned in the data is that what typically happens for AMC is that the stock gaps up from last night's close to this morning's open. So on Friday, the stock closed at $44 and this morning it's up substantially, and that ties in directly with this data. So what typically happens is the stock gaps at the open and then has a very large intraday trading range. And that's denoted here, as you can see, that the average intraday trading range, that is the distance between the high and the low of the stock, tends to be over 12%. So again, the stock tends to gap up at the open on Mondays, and then it generally will rise higher such that the intraday trading range will then come down, so you get a 12% distance between the high and the low of the day. So let's take a look at exactly what happened this morning to show how this played out. So here in TradingView, we have Friday's close, and as you can see, the stock closed at basically 44. And then what happened is pretty unbelievable. The stock gaps up at the open just under 4%. So if you remember in our data table, it said 4.5% is the average open. So there you are, the gap up higher, almost at 4%, just as the data shows. And then look at the high. The high comes about half an hour after the stock is open, and that move is almost 9%. So the average intraday high-low is 12%, but in this case, it's 9%. So today's movement falls directly in line with the data that we laid out for everybody last week. Now we got some other questions about how do you actually play this? How do you actually make money? Well, we don't offer investment advice, but we're going to show you one example of a trade that someone may look at and consider. So in this case, if we zoom out a little bit, we posted this trade in here. This is called an iron butterfly. So to trade an iron butterfly option strategy, what you do is you would sell, in this case, the 45 call and the 45 put. And then to hedge yourself, you would buy the 40 put and the 50 call. So again, you're going to be short the 45 strikes, long the 50 call, and long the 40 put. And you get a credit for that of $3. Now with the stock trading around $46, that means that this trade should be profitable as long as the stock falls within $3.45. So this is a short volatility trade. It's a time decay trade. And if the stock does fade from this initial pop, then it should go in the money and hopefully generate a profit. So this is just one idea, again, not a trade recommendation. Other ways may just be shorting the stock on these major pops when it goes higher. Maybe you want to consider selling some call spreads when it goes higher. Maybe you are an AMC ape and you love holding AMC stock long, and you can sell some of your holdings up here, and as the statistics show, the stock will tend to fade, in which case you may be able to buy back. So that's kind of trading around your core long position. So we hope that this intraday update reinforced how powerful is that data we showed last week. If you have any questions, please put them in the comments section below or hit us up at SpotGamma on Twitter.